Welcome back to what will be our final property panel for the year. Joining me, two of the stalwarts, Tim Fletcher from Fletchers Real Estates, from the REIV, Robery Larocca, former Mayor of Moreland, and from Infolio, on the panel for the first time, Lauren Staley. Welcome, Lauren.
Thank you.
Now, we're talking 2012. We've got the crystal ball out. We're looking into the property market next year. Robert, just from an industry point of view, give us your predictions or where you see us going.
Well, I think everyone will be hoping for a bit more of a better year next year than we've seen this year, because it's been a very flat one. Well, you know, the market does move in cycles. History's shown us, and history has also shown us that we've been close to this before around the GFC, and what we needed to get out of that was improved conditions in the Australian economy and, you know, lower borrowing costs, which we've seen through a reduction in interest rates, but also, and I think most importantly, confidence needs to be improved by an improved, you know, view of the global economy, because really Southern Europe and what's going on there is what's holding us back right now.
Will it be a better 2012 than this year?
I think it will be, but you know, I'm a little bit more bullish about the present market. That's not to say it's tough out there. But I think the biggest problem at the moment, which will go into next year and probably the year after, is that we tend to generalise too much about what's going on. And there's some very good results being achieved, not across the board, but there's some very good results. Now, we had 16 out of 20 auctions the other day. Now, you know, we were pretty bullish about that day, the results and the achievements, but that's not to say that happens every weekend. But I just think the reliance upon median prices is one of our big problems in our industries, because people tend to think prices have gone up or down a certain percentage, and that's it for their property. Well, it's not the case at all, because every property goes up and down at a different rate. You know, there have been too many auctions, I think, for the marketplace. You know, when the market gets tough, I think there's a good argument to be selling another way.
Well, the sales volume of auctions is 30% less than it was this time last year, which is much more than the overall volume drop that we've seen.
What's your experience of it this year, and I guess looking forward to next year, because you're a property advocate?
Yeah,
Lauren?
that's right. Well, look, I tend to agree with what you're saying. We attended an auction on the weekend. I mean, we buy within a 2 to 12k radius of the CBD, so it's a fairly specific area. But, you know, we attended an auction where there were 6 bidders, started at 5.30, under the hammer at 6.90. Like, that was a cracking result for the owner of that property. The last result was at the peak of the market, sort of 12, 18 months ago, and was in the mid-5s. So I agree, there are some still really great results that are occurring, and when you look at the values or median values, it's across Greater Melbourne, and if you're pinpointing particular suburbs, you might have a fairly different story to mention. As a buyer's advocate, we haven't necessarily found that there's a great deal of extra stock available that tick all the boxes for us to offer to our clients. But we do think that there's probably better buying conditions, better conditions that we can submit for our clients to get a favourable result.
Is there a chance we'll bump along the bottom, I guess, as it is for a little while? Will the status quo will remain next year?
I mean, in some respects, you know, the conditions now should lay the seeds for a better year next year, because you know, individual suburbs have seen reduced prices, which provides opportunities for buyers to come back into the market, and that's what we saw out of the GFC as well. You know, those conditions laid the seeds for a better year next year, and
but we're talking about a GFC too, with
well, I'm not going to say that, because
defaulting
you know, median house prices in Melbourne went down quite a lot more than they have now during the GFC. There's quite a large gap of difference. What's common is a concern about what's going on overseas, and you know, if the Southern Europeans can just fix up their economies, then I think we're going to be a whole lot happier.
There's a lot of doom and gloom economically in the papers, even though Australia's fairly well positioned with the resources boom. Do you think that confidence will remain, or people will regain confidence in the market enough to push it up at least?
Look, I agree with Robert. I mean, we can't bury our heads about the problems in Europe. I mean, they do impact on the rest of the world. There's no doubt about that. But when you come back to base here, we have got, in terms of supply and demand, and keeping it very simple, we've got pretty strong demand in certain suburbs, not so strong in others. You know, like, for example, Hawthorn and Mont Albert have had clearance rates, I think, year to date of about 70%, which is a lot different to the 50 to 60 that is recorded around Melbourne. Now, that'll go on all around the metropolitan area. It can't be held. That's got to happen. Interest rates, I think, whilst it affects the hip pockets, I think the big thing about an interest rate reduction, as the same when there's an increase. It's a psychological thing.
Because there's only 25 basis points, so it's what, $50 a month on the average mortgage.
It comes after a year of everyone being told it's going to go up, it's going to go up, it's going to go up. So it is confidence more than anything, because everyone spent the whole year going, it's going to go up, you know, and then we had the countervailing movement. So
but you know the other very important thing here, a lot of people like to see property values galloping up and up and up and up, but really the best way if you're transacting real estate, because a lot of people buy and sell, is to do it in the same market.
Correct, yeah.
And when you've got a market across the board that's been performing like it has, it's a great time to be selling and upgrading. Because, you know, when the market's going up at a great rate, you know what happens? People often sell first, then they chase the market up. They're not in front, they're behind, because they haven't transacted the most important thing of all, buying and selling a house in the same market.
Lauren, what suburbs are you, next year, would you be looking to...
We have a tendency to purchase in the southeast and the inner east. However, you buy at a premium in those areas. But capital growth historically has been very positive along there as well. So what suburbs
are we talking there?
Look, we're favourable on Hawthorn. We like Prahran, South Yarra, Elwood, and depending on what kind of property that we're looking for. If you're looking at a sort of a good quality investment property, 2-bedroom apartment in a boutique block, those are the areas that we generally pick. But in the west and the north, you can buy in at a slightly cheaper base, and they're still proving to have some really good results along there as well. What we find interesting in this current market is that Australians' financial position hasn't really changed all that much. And the only time you lose in property is if you're selling because you're forced to sell. So people are waiting for the market to have these big, huge changes. But unless you're buying to sell quickly, it shouldn't really have all that much impact on you. This has been one of the best times for people to be able to purchase property with favourable conditions, because not everyone's doing it. And yet they're standing back and they're concerned about what else is happening in the world, but it shouldn't really affect them unless they're doing it at huge, you know, loans that they can't really service in the long run.
It shouldn't. All the underlying fundamentals in the Australian economy and Victorian economy are good.
Yes.
Yet people are worried and concerned. When you open up the paper every day and you worry that, you know, where the economy is going, where are you going to get the money from to pay the mortgage? It's natural that people worry. But they shouldn't, because the Australian economy is doing very well.
Yeah.
It really puzzles me, and I agree with what you're saying. It's almost as if every buyer out in the marketplace goes to this whopping big dinner party, and everyone says, let's go out and buy, and they all jump on the bandwagon.
At the same time.
Well, I mean, Australians are a lot more economically literate, you know, due to the old, what we saw in the 80s and 90s, than they ever were before. And so they read all of that stuff, and they get a sense of what it means for them.
Yes.
Can you give us I would say 3 words, but just sum up the market for us in 3 to 5 words next year?
Good buying opportunities.
Nice and brevity, good.
3 words, that's not a lot of words.
5,
5,
She only had 2, you can have 7.
That's right, oh, fantastic.
Yeah.
Year of steady growth.
Only 4.
I'm going to say a bit more because I haven't spoken at the last minute.
I knew it.
The market goes in cycles. We're almost at the end of this cycle. Spring will hit Christmas, and then we'll be in the autumn one. It depends what cycle you're looking at, because that's when you get more supply and demand going on and a different commentary on the market. It doesn't change a lot, but the commentary changes. I think next year will probably be very much steady as we go. Depends a lot what happens in Europe, but I'm confident long term that property will hold its head up high. And if you buy property, you'll win, because you'll not only have a good investment, but you'll have a good lifestyle, particularly if it's your family home.
Lauren, Robert, Tim, have happy and safe holidays and breaks.
Same
That's the final panel. We'll be back with more Melbourne Property TV in a moment.